Hello viewers, welcome to my channel. I'm Hashim. So far 21 problems I've completed on partnership accounts. First 15 problems I've completed on admission, and right now we are discussing about the retirement. That means what are the adjustments to be made in the accounts of partnership firm when a partner retires. So already so many problems. If you are continuously watching, you might have got a good command on this topic of partnership accounts. So apart from this, I have uploaded so many videos on valuation of goodwill, valuation of shares, company accounts, bonus shares, etc. So if you want the perfect knowledge on all the subjects, visit the playlist of my channel. So many subjects are there. Select your subject, watch the videos, enhance your knowledge and get confidence on the subjects. So before starting the 22nd problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points, then I'll explain every point in detail. Now, see the 22nd problem. C, P and S are partners sharing profits 2 by 5, 3 by 10, 3 by 10 respectively. This is the profit sharing ratio among three partners CPS. Their balance sheet as of 31st December was as follows. Liability side capital CPS 16,000, 12,000, 10,000. Apart from that, reserves are there 5,000. Then bills payable, creditors. Then apart from that, one point you remember, reserves. At the time of retirement of the partner or admission of a partner, any reserve existing in the balance sheet will be distributed among all partners, including the retiring partner. So reserves are there 5,000. Bills payable and creditors, these two are the outside liabilities. Building, plant, motor car, stock, debtors, less provision, cash at bank. This is the balance sheet of CPS. Next page, adjustments are given. P retires on that date on the following terms. So out of the three partners CPS, P is retiring. So what are the adjustments? The goodwill of the firm is to be valued 7,000. Whenever a partner retires, goodwill of the firm will be calculated, and from that firm's goodwill, we have to calculate how much is the goodwill to be given to the retiring partner. Now, stock and building are to be appreciated by 10%. Plant and motor car are to be depreciated by 10%. If you want to appreciate the asset, debit asset and credit revaluation. If you want to depreciate the asset, credit the asset and debit revaluation. Then liability for the payment of gratuity to worker 2,000 is not yet recorded in the books, but the same is to be provided for. One unrecorded liability is there. This liability is not there on the liability side. Now we have to bring this liability into account. Liability will show credit balance. So this gratuity payable will be credited and revaluation should be debited. The entry will be revaluation account debit, gratuity payable will be credited. And in the new balance sheet, this liability will also come. Now, provision for bad debt is no more necessary. Already in the balance sheet, provision for doubtful debts is there 1,000. Now, adjustment is we don't require provision. So, if you want to remove the provision, debit the provision. Entry will be provision for doubtful debts account debit, revaluation account credit. Remember, whenever you are watching the video, keep a notebook, calculator, pen ready. Whatever points I am explaining, just to maintain running notes of all these points. Then only you can be able to remember. Otherwise, you'll forget. Simply watching the video, listening the lecture doesn't matter. The main important is you must have the running notes. Now, it is decided not to maintain goodwill account in the books. In the previous problems also I have explained. When a partner retires, goodwill should not be raised, but the goodwill amount will be adjusted in the capital accounts of the partners. The retiring partner's capital will be credited and the continuing partner's capital account will be debited. Here P is retiring. So P's capital account will be created. with his share of goodwill, and the remaining partners C and S will be debited in the new profit sharing ratio. Now, the amount payable to P is to be paid in 3 equal annual installments beginning from 1st January 2006 with interest at 10% per annum. This is to be paid in the 3 annual equal installments in future. But right now we are not concerned. Right now, whatever is the amount payable to the retiring partner, that should be transferred to his loan account. Here P is retiring. After making all the adjustments in the capital account of P, whatever balance due to P will be transferred to his loan account presently, and in future it will be repaid in 3 annual equal installments at 10% per annum interest. You are required to prepare revaluation account, partners capital account, new balance sheet of C and S. First of all, in this problem we are not required to pass any journal entries. First we calculate what is the share of goodwill. The old profit sharing ratio of CPS is given in the problem 2 by 5, 3 by 10, 3 by 10. Because denominator here 10, 10. So make this 5 also equal to 10. If you multiply 2, numerator and denominator by 2. So 2 2s are 4, 2 5s are 10. So instead of writing 2 by 5, it is better to write 4 by 10. Because all the denominators will be equal. So the ratio is 4 is to 3 is to 3. 4 by 10, 3 by 10, 3 by 10. P retires. So the new ratio of C and S will be 4 is to 3. The first 4 is for C, then P, then S. The P is retiring. So remaining profit sharing ratio is 4 is to 3. Now goodwill of the firm is given in the problem as 7,000. But this is the goodwill for the complete firm. We want what is the share of goodwill of the retiring partner. So 7,000 into 3 by 10. Profit sharing ratio of P is 3 by 10. So 7,000 into 3 by 10, 2,100. 2,100 is the share of goodwill of the retiring partner P. Now how it should be done? Therefore 2,100 should be credited to P's capital account and debited to C's capital account and S capital account in the new ratio of 4 is to 3. This 2,100 will be distributed between the continuing partners C and S in the ratio of 4 is to 3. So 2,100 into 4 by 7, 4 plus 3, 7 is equal to 1,200. And S capital 2,100 into 3 by 7, 900. So the entry will be C's capital account debit 1,200, S capital account debit 900, P's capital account credit 2,100. This is the entry for adjustment of goodwill in partners capital account. Now we'll make the revaluation account. P retires. The goodwill of the firm already we have dealt. Stock and building are to be appreciated by 10%. Appreciation means we have to debit stock account and building account and credit revaluation. So revaluation account credit side stock and building. 10% of stock value is 10,000. 10% of 10,000 is 1,000. And building value is 18,000. 10% of 18,000 is 1,800. So stock 1,000, building 1,800. 2 entries we have completed. That is stock appreciated, building appreciated. Next one is plant and motor car are to be depreciated. So entry will be revaluation account debit, plant account credit and motor car account credit. So debit side we will take plant and motor car. 10% depreciate. So we calculate 10% of plant. Plant cost is 14,000, 10% 1,400. And motor car 4,000, 10% 400. So 1,400 and 400 we have debited. Now apart from that, liability, gratuity payable. This is not there in the balance sheet. We have to bring it into account. So entry will be revaluation account debit to provision for gratuity payable. Right? So debit side gratuity payable 2,000. Lastly, provision for bad debts not at all required. Already in the balance sheet, provision for doubtful debts 1,000 was there. Now we have to remove it. So provision for doubtful debts account debit, revaluation account credit. So credit side, provision for doubtful debts. All the items we have adjusted. We have adjusted in revaluation account. Now we have to see whether there is profit or loss on revaluation. If credit side is more, there is a profit. If debit side is more, there is a loss. But this is the first problem where the total of the debit is 3,800, total of the credit is 3,800. Neither profit nor loss. No profit, no loss in revaluation account. That's it. Now we'll come to partner's capital account. To find out how much is the capital of each partner at the end after making all adjustment, and also how much is the amount due to the retiring partner P. First of all, opening balance. In the balance sheet it is given the opening balance sheets are 16,000, 12,000, 10,000. So here I have taken 16,000, 12,000, 10,000. That is the balance. Now apart from the general reserve, the general reserve is given in the problem. Balance sheet liability side, general reserve 5,000. This 5,000 will be shared by the partners in the old profit sharing ratio. 4:3:3. So 5,000 into 4 by 10, you will get 2,000. 5,000 into 3 by 10, you will get 1,500. And here also 1,500. General reserve shared by all the partners. It will not be given in the problem, but it is understood. Whenever a partner retires, general reserve will be shared. Next comes goodwill. The goodwill entry, there it is. C's capital debit, S capital debit, P's capital should be credited. The credit side, P's capital, C capital 1,200 and S capital 900. This debit aspect we have taken. Now, C and S should be debited. So debit side, C's capital, debit side 1,200, S capital, debit side 900 to P's capital. This is the adjustment of goodwill. Apart from that, yes. Now we have to find out how much is the loan, how much is the amount due to the retiring partner P. P's credit side, if you take 15,600, this is the 15,600. This 15,600 will be transferred to his loan account. So here to P's loan account, balancing figure 15,600. In the new balance sheet, on the liability side, we will take P's loan 15,600. That's it. Regarding the other partners C and S, we have to find out the balancing figure. Credit side total 18,000. 18,000 minus 1,200, 16,800 is the balance in P's capital after making adjustment. Now this capital will be shown in the new balance sheet. Similarly, S credit side 11,500. 11,500 minus 900, 10,600. This is the balance in S capital account. That's all. So this is the partner's capital account. Now I am moving on to balance sheet, new balance sheet. By seeing the old balance sheet, easily we can adjust and make the new one. First of all, creditors. In the old balance sheet, creditors are given 8,000. There is no adjustment regarding creditors. So directly I have taken 8,000. Then next, bills payable 2,000. No change at all. Same bills payable 2,000. But reserve is given. We should not take the reserve because reserve was already distributed. Right? But a new liability has arisen. That is gratuity payable. So gratuity payable 2,000. And one more liability. The amount due to the retiring partner P. And that is transferred to P's loan account. So here P's loan account 15,600. Lastly, capital accounts. Capital of C and S. Already we have calculated 16,800, 10,600. Over. Liability is completed. Now I am coming to asset side. Building. Old value of building was 18,000. But building was appreciated by 1,800. So 18,000 plus 1,800, 19,800. Secondly, plant. Plant book value, balance sheet was 14,000. But we have depreciated plant by 1,400. So deduct 14,000 minus 1,400, 12,600. Next is motor car 4,000. But we have depreciated motor car by 400. So 4,000 minus 400, 3,600. Stock was 10,000. But we have appreciated. We have increased the value of stock by 1,000. So 10,000 plus 1,000, 11,000. Debtor 7,000 less provision 1,000, 6,000. But we have removed the provision for doubtful debts. In the adjustment it is given no requirement for provision for doubtful debts. So don't deduct 1,000, directly you take 7,000. Debtor 7,000. Cash at bank 1,000. We have not made any entry for cash. So cash will remain same 1,000. Now find out the total on the liability side 55,000. Asset side also 55,000. Balance sheet tallied. So this is the end of problem number 22. So many problems we have solved. So if you want the perfect knowledge, if you want to gain the knowledge, watch all the videos from beginning till end. And don't join in between. Keep a rhythm of watching one video with another video. Then only you can be able to understand. So inshallah we'll continue the next problem in the next video.